Hey, good morning, Tommy. Thank you for having you today with us. I got Tommy here from Prime Corporate Services. My name is Jesus. I'm your host today for the for our podcast. And Tommy, if you could tell us a little bit about yourself, what you do, what's a little bit about your background, and then what how can private corporate services help new firefighters or sorry new investors or seasoned investors on how to build their business structure.
Of course. Yeah. Thank you for reaching out, and thanks for fighting all these crazy fires over there in California. It's much appreciated. Um, but yeah, I'm excited about this. A little bit about my background. So growing up, my mom was a real estate agent. My dad owned a real estate brokerage. My stepdad was a general contractor, and real estate was a huge part of my life, obviously, as you could imagine. And when I turned 18, I drove from Salt Lake City, Utah, where I'm based now, to Raleigh, North Carolina, and knocked door to door selling pest control. That was
Mm.
kind of my first self employed gig, if you will. And it was a long summer, gets hot over 100 degrees, 100% humidity. But when I came back, I did pretty well. I mean, I made 18 years old. I made about $40,000 in like 4 months, which at 18, I thought I was the smartest human in the world, right?
Wow,
But
nice.
when tax time rolled around, I had a tax bill and I didn't have any money. I already spent it all. So I realized very quickly and very early that taxes are one of the biggest pains that entrepreneurs and investors have to deal with. And it's something that no matter whether you're a firefighter, an investor, W 2 of any sort, taxes are something that you have to deal with year in and year out. So fast forward, couple different jobs, couple different self-employed consulting type things. But when 2012, I met Steve Harward, the CEO of Prime Corporate, and that's when Prime Corporate started. The four things that we really focus on is entity structure, so LLCs, corporations. We also help a lot of investors with building and developing business credit and corporate funding. We've got a really cool software to help guide people on how to build additional lines of credit. We've got a full service accounting firm. So monthly taxes, quarterly, annual, personal, business, and even estate planning, trust, wills, living wills, power of attorney. So our goal, to kind of sum that up, is if we can help investors and entrepreneurs and real estate investors like yourself, make sure that you're set up properly to give yourself asset protection, have a game plan on how to keep more money in your corner from a tax standpoint, and be able to build business credit to use that as opposed to personal funds and personal credit long term. That's obviously our goal. So that's a little bit about me and a little bit about the company.
Awesome. Okay, so you mentioned you mentioned something that I think a lot of people when it comes, especially right now, this season, right? Tax season, right? The first few months of the year, how having a proper business structure and setting up your LLC, how that's gonna help people to save on taxes. So you're able to help those as well, how to be able to set up the proper LLCs so they could save on taxes, correct?
Yeah, correct. So I'm happy you ask it this way because there's two kind of scenarios that a lot of times people fall in, right? The first scenario is someone will just use you as the example where you have other fighters that are reaching out to you and they're like, "Hey Zeus, what in the world are you doing? I see you're getting into real estate and building a legacy, and how do I get involved?" Right?
Hmm.
In situations like that, when you have a W 2 job, this is a very biased opinion, so brace yourself here. But I do believe that everyone should be self employed to some extent, whether it's a side hustle, side business, or full time self employment. And the reason I say that is because a lot of the US tax code is set up to benefit investors and entrepreneurs. So, for those of you listening to this that do have the intention of generating income or want to get into real estate or get into some sort of a side hustle, having a business entity allows you to write off startup expenses and organizational expenses. And a quick story I could share with you: a couple years ago, we had a client that was making $55,000 a year W-2,
Mhm.
and they were single. And so at the time, they were only able to write off 12,800, I believe it was. And just by getting that LLC in place and writing off startup and organizational and business related expenses, he was able to save about $5,400 in taxes. Now, that's not life changing by any means, but that's a lot of money to someone making 55 grand a year. So, yes, everyone's situation is different, whether you're already generating revenue, self employed, or if you're just getting started. Our goal is to give you a custom free 1 hour consultation so that we can really get into the weeds on what makes the most sense for you to crawl before you walk, walk before you run, or if you're already up running, how to keep more money in your corner based off your short term and your long term goals.
Awesome. Yeah, and I think that's super important, right? Because I think in the fire, especially in the West Coast, being a firefighter, it's we are high income earners, and me
Yeah.
especially, I work for LACD Fire, and I always try to find ways to be able to save, or use a tax code to be able to save money. So if I'm making high income here, how can I offset that so I could be able to keep more money in essentially in our pocket, right? And I think
Right.
having the proper structure help. If whatever you owe, I think offsetting it. It's always great to having an LLC. I know there's a lot of people out here, and for people that are watching in the future, that a lot of people ask questions about, like, well, what's the difference between an LLC and an S corp or C corp? If you could touch a little bit about that and see like if somebody could comes to you, be like, hey, I'm not sure how to, if I need to open up an S corp versus a LLC versus a C corp. Can you touch a little bit about all those different types of business structures?
Yeah, of course, for sure. So whenever you're setting up a business entity, whether it's your first or your 100th business LLC or corporation, there's three areas that I tell people to really focus on, right? Number one is privacy and protection. How much privacy do you want? Do you want your name or your address listed on the state website? How much protection do you need? How many assets do you have currently? So privacy and protection's number one. Number two is tax benefits, profit or loss. So good or bad, profit or loss, when you're making decisions, how can you put yourself in the best position possible? And then number three is credibility. Show yourself as a legitimate business, not only to your clientele, but to banks and to different lenders. So going to number two, to answer your question, tax benefits. When people are first getting started, a lot of times the reason that we recommend starting with an LLC is it's simple, it's easy, it's less expensive, it flows through to write off against your personal taxes, but there really isn't a lot of upside or benefit when you're generating income. So what we need to do is identify the type of income that you're generating. Is it active income or passive income? Right? So for example, if you're wholesaling or if you're fix and flipping, a lot of times that's going to be looked at as active income, less than 12 months. You're exchanging time for money, and that's the highest tax rate. So once you're generating $30,000 to $50,000 net of active income, exchanging that time for money, let's say you do a flip and you make $50,000. We can look at changing the LLC so that it's taxed as an S corp. And the beauty of an S corporation is it's still a flow through to write off against your personal, but it allows you to pay yourself a salary or a distribution. It
Mhm.
also allows you to avoid half of your self-employment tax, which is Medicare or Social Security. And then, so the LLC is going to be more simplified, but it'll still separate your personal and your business. The S corporation or the S corp election will give you that additional tax benefit in most cases. And then a C corporation is totally separate. it doesn't flow through against your personal. Sure, there's a lower corporate rate, but are you going to just keep the money in the C Corp? Are you going to take a draw or a distribution? I don't want people to fall into a situation where they have a double taxation, where they're getting taxed on the corporation with a C Corp, then they pay themselves and they have a personal tax on top of it. So as you can tell, it is rather situational. But if you're just getting started, an LLC is a great place to start from a foundation so that you can have the asset protection, you can separate your personal and your business, and you can still take business related deductions. So hopefully that, I know it's complicated and that's a lot of info, but hopefully that helps.
No, no, as me at the beginning, I admit it was a little confusing as far as like, hey, this is what I'm. How do I even start my LLC, or do I choose L Corp, C Corp? I don't even know the difference, right? So that's why I reached out. You know, being owners club sub two and all that stuff. I would like, well, who do we have to contact? So obviously they led me up to you guys, and that kind of gave me some clarity. I know we had some Zooms and all that stuff, right? So it kind of gave me some clarity of like, okay, this is kind of what I need to, this is the way I need to structure if I'm gonna be active, have active income, have passive income, how have a holding company, and then my holding company have a trust and all that stuff. So I do want to touch a little bit about like I know some people that I know here just in the fire service. I know that we always try to protect ourselves or have a trust. And you mentioned that you guys offer that too, right? So what like I know that you guys have a business structure, LLC or whatever, and then how can they have a trust that they're also kind of, can you talk about a little bit about like how having a trust would be able to have some type of protection, and how is that a little bit about like how's that built essentially?
Yeah, I like the way that you framed it as well, because only about 30% of America has an estate plan or a trust or a will, right? But it's interesting to hear your perspective, because being in a riskier line of work, and a lot of firefighters listening to this, you understand the risk and you have a little bit more sensitivity to that. We set up thousands of estate plans a year, and it's not the most exciting thing in the world. I'm fully aware, but a lot of times people will just get a will, or they think that trusts are for super wealthy people or organizations. And that's really not the case. I mean, if you own an asset, and I'm talking a house, a bank account, a retirement account, a pension, life insurance, making sure that those assets don't fall into probate is really the most important dynamic of what you're trying to do. So in California, it's some of the highest probate expenses, right? If something happens to you, you're going to end up paying a pretty significant percentage of your overall estate for that to fall into probate and them to decide where your assets go, whether you're married or have kids or anything else. So, the four components that we focus on are a trust, a will, a living will, and a power of attorney. Every state is a little bit different on what they want in place, but most of them are going to need a living trust to avoid probate. So to your point, if you already have those things in place, you have the trust, the will, the living will, the power of attorney, now we can start to build down, right? Jesus, you're the king of the castle. You're up top, right? And the more separation that we could have underneath, the easier it is to give yourself the separation and the protection. So you've got Jesus, you've got the estate plan, trust, will, living will, power of attorney. Then we make the decision of how much privacy do you want? We could have a holding company out of Delaware, or Wyoming is my favorite. That's where mine's set up. I'm sure yours is out of Wyoming as well, right?
Yes, sir. Yes, it is.
Wyoming's the best. It's simple, it's easy. But what's nice about Wyoming is our names are not listed. So to your point, both of us have a Wyoming holding company and it owns our other businesses. So if your active LLC was to get sued, or if your passive LLC was to have a slip and fall, they're not going to see that Jesus Padilla is the one that's on that LLC. they're
Mhm.
going to see that it's a Wyoming company where your name is not listed. So having some privacy, giving yourself the protection, separating, we've all heard, don't put all your eggs in one basket, right? But no one tells you what eggs to put in what baskets, right? So
Yeah.
if we can separate out the different businesses, we don't want to intermingle an online business with real estate because the liabilities are different, the taxes are different, the deductions are different. Separate those eggs out into different baskets and give yourself layers based off of your need. You don't need to get all these things at once,
Mhm.
one at a time, so you can feel comfortable and have protection, tax benefit, and credibility.
Oh, nice. That's good. Yeah, that's a really good way how you put it, as far as the like kind of like the flow of like, hey, you have this already. Let's start working on your protection. Let's start getting a holding company. Let's you're essentially I guess doing some layers, right? As
That's
protection.
it. That's it.
Yeah. Okay. Cool.
So,
The you do mention a little bit about business credit.
yeah,
Why is it important, and why is it not? Um, I guess I wouldn't say it's not a why business credit is good, but also why using your personal credit could hurt you in the personal side,
sure.
or vice versa.
Um,
Or what are your thoughts on that?
I'll start by asking you a question. Do you wish that you had less money?
No.
Hey,
Yeah.
the 15 years I've been doing this, that answer is always no. I don't care how much money anyone has, right? The more money and the more funding opportunities that anyone has, the easier it is to grow, scale, and help more people, right? I'm going to give my mom a shout out here.
Mhm.
She always used to say, you give Mother Teresa more money, she does more good. You give someone bad more money, they do more bad. And a lot of this just comes down to making good decisions and inherently being a good or a bad person. So the way I like to frame business credit is on the personal side, you have your name, your social security number or your ITIN, and a personal FICO credit score, ranges 300 to 850, right?
Mhm.
When you don't need money, everyone and their mother sends you a credit card application. When you need money, it tends to be a little bit more difficult to come across. So everyone has problems. If you have good credit and you make money, those problems are oftentimes easier to resolve. On the business side, let's make sure you have a legitimate business name. Let's make sure you have an EIN or an employer identification number. That's like the social security number for your business. But you can also build and develop this paydex score, and it's a credit profile that's for your business. It ranges 1 to 100, and it takes time to build, right? A lot of times it takes a good 6 months to get real lines of credit. It's a year, 2 years. But the same question I asked you earlier, Jesus, in 2 years, in 5 years, in 10 years, if you go through the steps of building up your business credit, I doubt that where you are currently and having properties and already being an investor, you're not going to be looking 5 years down the road saying, man, I wish I didn't have these additional funding opportunities, right?
Yeah.
You're going to be grateful that you can invest into properties or you can furnish properties or you can put money into marketing or use business credit, let the business pay for itself and then pay yourself from there. It's one more way of how you can separate your liability. But I have a mentor that's like, the opportunity of a lifetime only comes across your desk twice a week. So make sure you're ready.
Yeah.
And I kind of laugh because it resonates, right? There are opportunities that you turn down due to lack of capital. And even if you're in the beginning stages, if you can build good business credit, if you can build good personal credit, the problems that arise in your life, personal or business, are easier to resolve with money a lot of the
Yeah.
time. So I think that building business credit is a great long-term tool to sustaining more sustainable growth. That's really the ultimate benefit, I think, when it comes to business credit.
Yeah, no, I thanks for and I appreciate that because I do have when I started in real estate back in like what 4 years ago, and I didn't know anything about business credit. I was just using my own personal funds, my own personal credit. And quick did I find out that I hit a ceiling. I was like, am I it goes to using my personal side, it goes against my debt to income, right? Because everything
Yep.
is tied into my personal side. I use my own funds as far as like just what I was getting from the my savings from my the fire department, right? And then quickly I had to put like 20% down on all the properties that I purchased, right? So then I got to the point like, okay, I want more properties, but to your point is like how do I didn't know anything about business credit. I didn't know anything about how to even get a credit card for my business, how to even set up my proper LLC. So, like you mentioned earlier, look credible for institutions to banks to be able to fund you to give you business line of credit. I didn't know none of that stuff 4 years ago. Now, thanks for that you mentioning about how important it is to have a business a business line of credit, how to even start. And it does take time, 100%. And I want to everyone that's listening out there, it does take time to
For sure.
build business line of credit. Um, but yeah, so for the people that are listening in the future or in our YouTube channel, is like we when is the right time to start? When can I like be like, hey, I want to start my LLC. Hey, I want to start my business credit. Like when is the right time to start? Is people always gonna? I know some people might say, oh, I started next week, and then next week comes and they don't never start. So
Right.
what,
Yeah.
what yeah, what do you say to the audience that be like, hey, or to even firefighters right here, right? I think that they're gonna be listening to this in the future. Like, hey, like you're you're a high income earner. You want to get into real estate. When do I have to set up my LLC? Do I get
Yeah.
the property first, then set it up, or do I set up my LLC first, then get the property?
Yeah. This is a really good question because the to answer it as directly as I can, the best time was yesterday, right? That's ultimately what it comes down to. But I will say I've done this a long time, and I think that you also have to be comfortable with the decisions and the risk that you're taking. So a lot of successful people, a lot of people that you and I mutually know, right?
Hmm.
Pace Morby's, a lot of these very successful entrepreneurs that you hear go speak on stages and they've created this enormous wealth. Sometimes it feels like unobtainable. And it's like they all have a very similar message of take action, action takers make money, go make decisions, yes or no. And there is some truth to that. A lot of the times it's not the smartest people that make a ton of money. It's the people that are taking risks and taking action. So if you're listening to this, you clearly have the intent to generate income, or you're already actively looking for properties, or you already have properties. So set it up as soon as you can to have the asset protection, to show the intent to generate income, to start building your business credit profiles, because there's no tax code that says you have to be the best investor in the world.
Yeah.
But there is a tax code that says if you have the intent to generate income, you can take business related deductions. So even if you're pre revenue, my opinion is set it up, have the foundation. That way, when you locate a property or you do a deal or you make money, you have those ducks in a row from a foundational standpoint to continue to grow, continue to scale, and focus on the main goal. And that's making money, right?
Right.
Keep the main goal, and allow these things to be a byproduct of having asset protection. Because one of the things that you said that I just want to come back to as well is banks are a business. They make a lot of money. They make money off of your money. If your money's sitting in the bank, they're using that money to go make more money, right? They
Right.
want you to swipe that card because they're going to make interest, they're going to make merchant fees. So, knowing that banks are a business, if you can appear as a business with the proper naming, the proper entities, the proper address, the proper ownership, it makes it a whole lot easier to obtain additional lines of credit and additional funding as well. So,
Yeah.
if you're listening to this, you clearly have the intent. I would say set up the business entity, and start focusing on building business credit and generating income. And remember, it's a long-term play. It's, being a business owner is not easy. There's always challenges, and it's not get rich quick. It's long-term. Build a legacy and set yourself up from the very beginning.
Thank you. Thanks for clarifying that. And I hopefully anybody that's listening to this, like, again, I think it's going to have a clear vision of like, you know, reach out to you and to your company and stuff to properly set up their business structure. I know I have one more question, Tommy, that I have here in my notes. One more question, and and again, I get, and this is one of the common questions I had from my local firefighters is like, hey, I already have 5 different properties,
Okay.
but they're all into one LLC,
Okay.
but all my properties are in different states.
Okay.
So I'm sure you know what I'm going to ask here is like, do you need 5 different LLCs, or can you have just one LLC, or what is the answer here?
There's no one right answer. We'll start there, but here's what I'll tell you. And this is partially why I think we've had a lot of success at Prime Corporate.
Mm-hmm.
And another thing that is important to understand, your risk tolerance, the amount of equity or the value of these homes, and are you properly insured? And a lot of times, so I've got a full team of attorneys, a full team of accountants. If you ask this question, how many properties per LLC to an attorney, they're going to oftentimes, not always, but often say different LLC for every property, right? If you ask the accountant, a lot of times, not always, they'll say, just keep them all in one. It makes the tax filing a little bit easier. In my opinion, there is truth somewhere in the middle. So an example that I'll share with you. I have some clients that will do a different LLC for every property. I have other clients and other investors that have, I kid you not, 1,000 doors in one LLC. What is the risk tolerance? What's the equity and the overall portfolio value? And
Mm-hmm.
make sure you're properly insured. Even for myself, I have 12 properties right now in one LLC out of Missouri. If 5 years ago you told me that that was the case, I would have called you crazy. But at this point, I'm like, can I squeeze one more in by still being insured and making sure it's okay? Every state is a little bit different, right? California's got a franchise fee that's higher than other states.
Mm-hmm.
Utah, the cost is very inexpensive. Missouri, the cost is very inexpensive. So depending on the state that you're in, what is your cost? What is your liability? What's the property value? And have a realistic conversation that allows you to make that decision on what is best for you, because there really is not one right answer, in my opinion. If you were having 5 properties in California, 5 LLCs, it's going to be pretty expensive to file that tax return, right?
Yeah.
But if they're all in different states, let's identify what the cost is and make an educated decision on, are you going to get more properties in that state? Because if you are, it probably makes sense to set something up there so that you can grow and you can scale in those other states as well. So complex answer because it's a phenomenal question, but does that help?
No, that's definitely it helps, and I'm sure you're gonna have a lot of people reaching out, probably asking the same question, so they could get more clarity. And I think it, like you said, right, it all depends, right? I think the best answer that an attorney could give you is they always say it all depends.
Yeah.
You know, but no, thanks for answering that question. So for all you listeners out there, how can they reach out to PCS? How can they reach out to you guys and your team just to even schedule like maybe a consultation call or things like that?
So what I'll do is I'll have my team put a link together for you so that I know that they're coming from the firefighter investor. I know they're coming from you, right? Click on the link, and what we'll do, we'll give you a free 45-minute to hour consultation. And you'll speak one-on-one with one of our advisors, and we'll meet you where you are. What are your short-term goals? What are your long-term goals? Where are you currently? Where are you going? How are you set up currently, or do you need set up from the very beginning? I'll get you a link. They can click on the link, schedule that free 45-minute to hour consultation. And when you schedule the call, for anyone listening, please remember that call's for you, right? Don't miss it because it's free for you, but I still got to pay my team. But do you need entities?